Hey everybody, George here, and today we're going to talk about three stocks that have the potential to 5 or 10x to $200 to $500 within the next year or two, or potentially vanish off the face of the planet. Now, we all know about Tesla, right? The company that went from $3 to $1,500 before splitting in four and now back to $600. Now, we want to catch another company like that, and especially now in this craze of evolution and technology where the entire world is going towards EV and less carbon emissions, what will be the next Tesla? So today I'm here to help you find that next Tesla, right? In my opinion, these three companies will be and have the potential to surpass Tesla. Now, if you've been looking at the market at all, especially the EV market, you probably already know these companies. These three companies are NIO, XPeng, and Li Auto. Now, unlike Tesla, these companies are based in China, which is an enormous market for emerging EV because they made bold statements such as by 2025, 25% of their vehicles shall be electric. And let's not even talk about their long term goal in 2060, which they plan to reduce their carbon emission to zero. That is huge for the electric industry. Now, just for reference, because we all like numbers, China has 370 million vehicles on the road. That is more than our population in the United States right now. If only 25% of that car population would convert to EV, that would come out to 74 million electric vehicles on the road in China. Now, let's talk about how many cars these three companies combined have made in this year. Total numbers are estimated between 100,000 vehicles this year. Now, comparing that to Tesla, in 2019, they roughly had 368,000 vehicles. That's almost three times as many vehicles as these three companies combined. But before we talk about hard numbers, let's talk about the elephant in the room. Recently, US lawmakers have decided to enforce US regulations onto Chinese companies, and those who do not comply within a certain amount of time, 5 years if I'm to be exact, will be delisted. On the bright side, these three companies that I'm mentioning, NIO, XPeng, and Li Auto, have U.S. auditors by the name of PwC, PricewaterhouseCooper. Now, this doesn't necessarily mean they will not be delisted, but there's a high likelihood that they will follow regulations as to these companies no U.S. regulation. And in my opinion, there's about a 2% chance that they will be listed. So if you're worried about any of these three companies being delisted, I wouldn't put too much fear into that. But if you are afraid, I totally understand. The main takeaway from this is these three companies, and in general, Chinese companies, will take a slight hit in the stock market because people are afraid. People think all the companies are going to be delisted. People that don't do the research to make sure their auditors are correct auditors that understand U.S. regulations. Now, what does this mean for us? It is a great opportunity to buy these companies and invest in these companies long term for a discount. But for now, let's talk about some catalysts within these three companies that could have them skyrocket or plunge to the very floor. But let's talk about the one everybody already knows about, NEO Day, which is scheduled to be January 9th of next year. NEO Day is where NEO presents all of their new technology and vehicles. This is where they can show off to potential buyers on what is coming on the horizon. Now, with NEO specifically, they tend to have flashier cars and they're going for the awestruck look. So, potentially having nicer cars, better technology, better autonomous technology could drive the stock up. Now, going to XPeng, XPeng specifically has the best autonomous driving in all of China. They are known for that. Even though Elon Musk did throw some shade on the company for still sticking to LiDAR, which is Tesla's older generation autonomous driving, XPeng said they are confident that LiDAR is the future for them. Currently, XPeng is around autonomous level 4, which is almost fully autonomous driving. Their goal is to go to level 5, which is full autonomous driving, where essentially you don't have to look at the road and you can go to your destination. Now, when you look at Li Auto, they're more of a hybrid vehicle, which means they have gas and electric, which is very good for China currently because their infrastructure is not made for the EV industry just yet. Now, that's not really a big deal for China because we know if they want something done, they can pop it up overnight. And unlike XPeng and Neo, Li Auto is going for more the conventional family route where they have more SUVs, which isn't as high demand in China. Now, in my honest opinion, this is better for the long run because families are growing in China and there are not many, like I said, EV charging stations in the country of China. So if you're going long distance and you have nowhere to charge, you might be stuck. But if with a hybrid car, you can go those farther distances because you have the gasoline as backup. Now, all three of these companies have their specified markets, right? Neo is more the flashy one everybody hears about. XPeng is the company that is focusing on the technology like autonomous driving, and Li Auto is more the conventional that everybody will most likely use in the beginning because it is the hybrid and it is the cheaper of the models. So when it comes to Catalyst, in my opinion, just sheer volume of cars produced increased next year will have the stock price driving up. Another one, if these cars meet their quotas, they can receive additional financing to help growth within their company. So far, within this year, NEO is set to hit their goal to receive additional financing from the government. Now, remember, I said they've only made a total of 100,000 cars in total of this year. If they were to increase that by three and it could reflect to their stock price, which would be a huge catalyst for growth. Now, on the opposite side, a negative catalyst could be those companies are not properly following US regulations getting delisted, which could be a huge hit to the individual companies. I don't know if anybody here remembers Luckin Coffee, but it was going up, 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 and everybody thought it was legit and invest now and everything. And then they came out to where most of their sales were fraud and they were forced to shut down. Now, I don't think this will happen with these three individual companies because they have a solid product, but you never know. So that could be a negative catalyst to the market and fear. Sometimes people sell the stocks when they are fearful that it might be delisted. Overall, I feel like these three stocks are great long-term buys. They might be still a little expensive, which you can wait for a little more pullback potentially, but overall, just buy diligently, slowly invest, and you should see nice returns. But guys, on that note, I am no financial expert, so do your own research before investing your money. Could this company be the next Tesla or the next Nikola? I guess we will see. I'll see you guys next time.